Hi guys, hope you are fine at home. Okay, today we'll be looking at the topic cash flow forecasting and working capital. Quickly, let's look at the lesson objectives. Explain the meaning of cash flow, cash inflows, cash outflows, and cash flow cycle. Discuss importance of cash flow forecast. Analyze how a cash flow forecast is constructed and how it can be interpreted and amended. Okay, now let's look at the meaning. Cash flow. We are considering cash flow first. Cash flow of a business is the cash inflow and outflow. That is the cash that is coming into the business and the money that is being spent, okay, within a period of time. Now, we look at the cash inflows. Cash inflows are the sums of money received within a period of time in an organization. For example, if someone walked into a computer firm and the person paid for a computer, the money being paid into that company is actually referred to as cash inflow. While cash outflow are the sums of money paid out by a business during a period of time, okay, a business that is doing some sort of renovation. Maybe they need supply of granite and some other things. They can order for it. Now, while ordering for it, they have to pay money to those that will bring the supply. The money paid to those people is what we refer to as cash outflow. Now, a cash flow cycle shows the stages between paying out cash for labor, materials, and receiving cash from the sale of goods. Now, let's look at why cash is important to a business. Now, if you look at it, I don't think any business can survive without cash. Before you can do your business, you must at least be bold that you have cash which you want to use in running the business, because cash is a liquid asset and it is used for day-to-day running of the business. We can even say it's the backbone of a business. Now, inability to pay workers. If a business does not have cash, they will face these problems: inability to pay workers, to pay suppliers, to pay landlords, because at times where you are using for your business may be a rented apartment and you have to pay your landlord. So if there is no cash, you will have that problem of paying the landlord and also the government. How do you hold the government? Like payment of your taxes. Now, liquidation of the business may cease to exist since there is no cash again. Now, production of goods and services will stop because they don't have cash, which they will use in running the business. Now, move to the next slide. How can cash flow into a business? How can cash flow into a business, okay? Now, it can flow into a business through this medium. We have through sales of products for cash. The products produced by the business, once it's been sold out, for example, let me use Preston as an example. Preston is into production of bread. We are baking bread. Now, once the bread is done for sale, they will take it out to sell to people. Now, that's another means of generating cash for the business. Payments made by debtors. If you have debtors that are owing you, once they make payment to you, you've actually gotten money which you use in also running the business. Borrowing money from an external source, sale of company asset. The assets that you feel you don't need any longer, maybe they are kind of obsolete and you still have some people who can use it out there, you can decide to sell it. Okay? Now, we have to the next one. How cash can flow out of a business. How do you think cash can flow out of a business? For example, now, you have your business, just as I used Preston Superloaf as an example. Now, Preston Superloaf, if they want to make the bread, in making the bread, they have to go to the market and get the materials. Now, in getting these materials, which they will use in producing the bread, they will have to pay. They will pay in exchange for the materials which they're going to use for the production of the bread. That is another way through which cash can flow out of a business. Now, payment of wages and salaries. You have to pay your workers. They can't just be working for you without you paying them. Then repaying loans. If you have some loans you are servicing, you have to pay back the loan. purchasing of non-current assets, and paying creditors. Okay? Now, this is a cash flow cycle. The first stage, you have to consider the cash needed to pay for. The cash you want to pay, okay? You've actually made supply, and you have to pay for the services which they have rendered to you. That is the cash needed to pay for. What you have to pay for, materials, the wages, the rent. Then we have the next one, the goods being produced. We have the next one, the goods sold. And lastly, we have cash payments received for goods sold. Okay, so this is the cash flow cycle. Now, importance of cash flow forecast. Number one, it tells how much capital is available for payment of bills. Then another thing, it tells how much cash the bank might need to lend. If, for example, you need to get money from bank, maybe to do you actually have the money, but the money you have on ground may not be enough. So you have to approach a bank for a loan so that you can also use the loan to help in boosting your business. So you have to tell the bank the amount you actually need to get from them. It tells you the business has more cash to put to a more profitable use. Now, what are the uses of cash flow forecast? What do we use it for? We use it in starting our business. We use it in running the business which has been existing. Then keeping the bank manager informed and managing cash flow. And now we've come to the end of the class. Wishing you a nice day. I'll be expecting your questions via the Google Classroom. Have a nice day.